Hi friends, welcome to my channel. So today we are going to be talking about 5 personal finance tips for a married couple. Now the reason I came up with this was because of my interactions with a lot of my friends and colleagues, and I've seen a lot of models in which they treat their finances. So I've seen models where husband and wife both have their individual accounts and they have passwords of their accounts only with themselves, and they have their own P&L, and the common expenses obviously get split between the two. And I've also seen a model in which the husband and wife pool their funds, and they commonly decide on where they would be spending the common money. And for both these models, while I've seen both these models work successfully for each of their individual cases, I thought why not make a list of all the basic items that can be followed across both models, and which has really benefited me in my 7 years of marriage. So the first thing that I want to be talking about is defining goals. What do goals mean? So once you're married, you obviously have certain individual goals, and you have certain goals that you want to do as a couple. So for example, vacation becomes a goal that that both of you might want to chase, and something like a Harley Davidson, or something like a Louis Vuitton bag, or something like a big a big purchase, a big ticket item that you might want and your partner might not, would be an individual goal. So make a list of all the individual and the combined goals that you might want to chase, both in the medium and the short term. I'm not talking about the really long term ones here. So make a list of all those goals. Another interesting goal that I have coined is a sabbatical fund. So a lot of my friends, have. A lot of my friends want to take a sabbatical at some point in their life. Maybe they want to travel, they want to write, they want to do something that they're passionate about in that time. And a lot of my friends have now started to put together some amount of their savings towards that fund. So that's something that I call a sabbatical fund. So that could be one of your goals. Buying a house could be one of your common goals. So make a list of all these goals, and try and define them and bracket them in short and medium term categories. Now what this will do is this will give you a huge meaning and purpose to both, for you as well as your husband. So while you might have a common inflow of money, which would be at a certain X level, but you would know that in the next 5 years I want to chase this goal and I want to fulfill this goal, and hence I want to be earning this much in the next 5 years. It gives you a huge purpose. It gives you the rate of growth that you would want in each year of your career. So it clarifies a lot of things. What I'll also do is list down some sample goals that I normally that I had in my life, and that I continue to have in my life, and it might be relevant to a lot of you. So do check out the description box for examples of goals. The second thing that all married couples should do is to start a recurring deposit or a SIP. An SIP is a systematic investment plan. Now what this does is, I think this is a rule that my husband and we swear by. So we started an RD. So what had initially happened was we used to earn really less, and both of us combined also our income was really less. And what used to happen is, in months where there would be no additional expense, we would manage easily. But in months where there would be some kind of additional expense that would be unplanned, it would hit our plan, it would hit our P&L, so to say. So what we decided was to start an RD of all the funds, of all the expenses that we foresaw. So for example, if we had to take a trip back home, we decided to put certain amount of money for that, because we knew that was going to come every year. So we started putting in a small amount of our salary every month towards that, and we used to call it like a trip fund or some kind of fund. So we have a fund for everything in between the both of us. So we have one fund for We have a fund for vacation, we have one fund for family, we have one fund for buying gold. So we have one fund for our child, we have one fund, and for the child we have different kinds of funds. We have one for his education, we have one for his higher education. So we have lots of funds between the two of us. So yeah, but I think that starting an RD or an SIP is something that all of us should swear by, because what it does is it puts a lot of discipline in your expense. So while you might get say 50,000 rupees as part of your salary, but if you do an RD for say 2,000 rupees out of that every month for say 12 months, what it does is that it reduces your inflow of 50,000 to 48,000, and you end up managing your expenses within that 48,000. But what happens is that when you actually have to spend that 24,000 on something, on say taking a trip, or gifting some relative for their marriage, or any capex, it doesn't put a load on your monthly expense. So starting an RD or an SIP is a rule that we swear by. An SIP, obviously, as all of us know, is anyways very, very goal driven, and but then, like we said, we have to have a purpose towards every RD or an SIP that we start with. So you have to have an Excel sheet that would match the RD amount, RD number against the goal. And I'll be talking about this Excel sheet in point number 5. So going to the next point, the third reason why what a married couple should do is start an emergency fund. I think with COVID and all the other diseases and situation around the country being extremely volatile, we should all have at least 3 months a salary as an emergency fund parked in our bank account. Some people even say that 6 months of salary should be parked, but I think 3 months is a bare minimum that you should target. So if your salary is 50,000 rupees today, you should have an emergency fund of 1,50,000 rupees in the bank account, which would be an emergency fund, and that should not be touched for anything. So if you're taking a trip or you're doing any other expense that is not related to that's not an emergency, it should not be touched. The only time it can be touched is a medical emergency where you are genuinely short of funds, or of course an emergency where there has been a loss of job between the two of you. Now the fourth tip for married people would be to have some kind of protection instrument in your financial portfolio, and that should be started very, very early. Now what does this mean? So we all know that there are different instruments in which we can invest our money. So we have our bank fixed deposits, we have mutual funds, we have stocks, we have gold, we have public provident fund, and we have a lot of other instruments in which we can invest our money. But one thing that I would strongly recommend is to have a good portfolio of protection instruments or risk covering instruments. So which I'm talking about insurance. Now you can start with term insurance, because it protects your life, and then you can move on and buy other forms of insurance. But this instrument should definitely be part of everybody's financial portfolio. The last tip for married couples would be to have a common Excel sheet. While this sounds very, very basic, I have seen couples where the other person doesn't know where the money is or in which bank account the money is, how much money is there in between the two of them, and if there is God forbid a medical emergency, or if there is a situation where the other person is out of the country and is not reachable, and for some reason the spouse needs access of money. I've seen a lot of cases where the information is not transparent between the couples. Hence, I would advise to have a common Excel sheet, preferably on the cloud. So we use Google Sheets between the two of us. We in fact even named it. We call it our treasure sheet, and our treasure sheet has details of everything. It has details of our bank account. It has details of all the money that we have in different banks. It has details of our mutual funds, our insurance policies, both term as well as health. It has details of our of the various recurring deposits that we have. So all of this information is at one place, which also helps us a lot in our tax filing. So because I file our taxes, I file my taxes on my own, and I also do my husband's filing. What this does is that if there is any other income from any other instrument that you need to include as part of your, in addition to what is mentioned in your Form 16, it really helps you, because you can quickly go to your bank account, download the TDS statements, and you can include it as part of the other income if required. So yeah, the fifth tip is to have a common Excel sheet between the two of you all, and this Excel sheet should have every detail of every financial instrument that you hold. So if you have a fixed deposit, if the wife has a fixed deposit and the husband also has a fixed deposit, both the fixed deposit details should be mentioned in that sheet, along with the fixed deposit number, the maturity date, as well as the amount, so that there is complete transparency between the couple. One bonus tip that I would want to talk about is to update nominee details in all your insurance policies and your bank accounts. What I've seen is a lot of people don't have nomination details updated as part of their financial instruments, and this causes a lot of trouble when there's some problem with them. Hence, updating the nominee details in your insurance policies as well as your bank account is very, very important. So these were the 5 tips that I wanted to speak to you about. Do let me know if I have missed out something. These are very basic tips that we follow as a couple, and do leave your thoughts in the comment section. Like, share if you felt that I've spoken something of relevance, and do subscribe to my channel to keep getting content on financial matters. Thank you so much, guys. Have a great day.